Evening to all traders. This is the market with Odinga. It is the daily review today. I always opening by pointing out the project I am now writing or programming. I am the consistent, profitable, independent, informed thinking trader. I am programming this algorithm and with the backtesting series with the experience I am gaining daily from tape reading, backtesting, and journaling, I hope then to be able to utilize or deploy this algorithm in the future to trade for me the market. And the whole purpose is that I like to trade in sync with the smart money trader. I'm greeting you from Suriname. It is a country in South America, um, and I'm always we will be doing the daily review of today. Actually, if I from here I want to go first to the channel. This is the channel. Those that have subscribed, I welcome you and thank you for the support. I think you will find value having subscribed to this channel. That is, we are approaching the market with ICT concepts in mind, with his principles, and the purpose is that we want to learn in time, and we want to submit also to the time and learn in time to trade algorithmic, just like the banks intrabank traders are trading. This is the channel. I also have a blog. I haven't posted much, but I have not posted much lately. But I have also a blog, and you are advised, recommended to view sometimes this blog and see what we have there for you. I from time to time uh, post or repost some of the bytes from Twitter space that we have from the mentor himself. I'm always saying that nobody can explain ICT concepts as he has explained it, and the only reason why we, those that are now maintaining a channel, can maintain a channel is because there have been uh, when he was explaining and taking time to do the teaching, some people uh, have then not subject to the process enough, or you have not been there. He has made his material available, and still his material is available. So you are invited to go. The process is simple. If you, I think at this, or I think on my TikTok, for my TikTok community, I have explained the process, and I would like to do this here before we go to the chart. This is the daily review, but I think this understanding, this knowledge is essential so that we can know why this channel and why I'm doing these daily reviews and analysis. I'm looking. The process is simple. You go to ICT. I call it the source. Actually, he is the library, the free library for all who want to learn the algorithmic language. He is the he have taught it well, and I think he is the best to explain all the language, the nuance, everything that have to do with algorithmic trading. I think he has covered it thoroughly. And if you do a course, either a model, either a full course. Let's see, I think he have about 652 videos. Doesn't matter what language you learn from him, there will come a time that you will need to apply that understanding, that knowledge. And that application is where I hope to contribute and to help those that subscribes to the channel, and to find a way, a best way, a simple way, an ICT way, an an algorithmic way to read the tape first before demo trading, before real life trading. It is prerequisite to good trading, consistent, profitable trading. Start with really reading the tape well, and then demo trade for 70 to 80%, aiming at 70 to 80% consistency. And after that, then one can decide to to trade to trade algorithmic. But for now, welcome to my channel. Yesterday we had a daily review, and today we will be going to the chart, and we'll do also a daily review and a analysis of, and maybe a prediction. We won't be predicting too much. Why? Because we are in the non-farm payroll event week. That is Friday 9:30. We will be experiencing this news driver. It is a high impact news driver, and this news driver can be used to by the market maker to manipulate, to manually intervene in the market. Not every time they do it manually. They deploy sometimes an algorithm to do the manipulation. It takes some experience to understand when that happen. For now, the protocol is that we trade from Monday, Tuesday, and Friday as early as 11 o'clock. That is where we look for our setup, and after Wednesday 11 o'clock, we allow the market to do its thing till after the event around 11, 10:30, 11:30. Then then you can assume trading. Most of the time, like this week, I already reached my week target, so I'm not really in a rush to take a trade, not even in the after 9:30 or after 10:30. So most of the time I leave the Friday open. For if you already have your target, you don't rush to go into the trade, or rush to take a trade after non-farm payroll, to then take a loss and go with that loss in the weekend. It is better to wait. We are not in a hurry. We are not in a hurry to engage the market. We anticipate certain things, especially. I think it is one of the most important lesson that we have learned and have gleaned from the mentor, is that he said learning when not to trade is most important than learning when to trade. And when not to trade sometimes is because of the landscape of news driver that you have. If, for instance, I'm already looking at next week news calendar, news driver, and what we are seeing, normally the Monday doesn't have any information. I will give a high time frame analysis on Sunday and post it, and I will make known my bias, my directional expectation, my directional um, uh, my prediction of the market. But we are seeing will have Wednesday morning CPI, and we will also have that same Wednesday FOMC, two high um, impact news driver that can also be used as mean for the market makers to manually intervene in the market, clear the table. We do not trade ahead of them. We do not want to trade these days. We normally call them no trade, no gambling, no trade gambling day 50-50. All because it is not always algorithmic, and we don't know when they will deploy the algorithm to do the intervention. So we leave these news driver day clear, and then trade next day. We will also have 932 CDPPI number, which is also a very significant number. But after FOMC and then the PPI number, maybe 9:30, 10:30, one can trade well. For now, we still in this week, and we have today, the Thursday, the 6th of June and the 7th of June. That is for tomorrow. Tomorrow will be a day off. Most of the time, I'm not even tape reading it. I just take time to study and look at the chart, look at some materials outside of the chart, and then afterward come and tape read it. He actually told us to study the these days how the market maker engage liquidity. Is a study of order flow, he call it, and it is great if one want to do that. But I'm just taking the day tomorrow off, and tomorrow the Friday I will be here tape reading, but after 10:30, then I will have a clear landscape what the non-farm payroll have done, and I can go and engage or just tape read it. That I think I have done. I set enough of this calendar. We don't fear. Uh, we don't fear tomorrow and Thursday. If the market move trending and trade well, we don't fear uh, losing of missing any move. So we just see it as another trading day, and we will wait on other news driver to engage the market. Um, yes. Go to the chart. Um, you have seen a very beautiful run today, even to take a significant high. Let us go to, I think we will start at a weekly chart. It is the ESM, and actually the weekly chart have taken a 2 months ago swing high, not strong enough, very shallow, but it have engaged the buy side liquidity that is above this swing high. So that is significant, that is nice. If they already have engaged this liquidity on a day or 2 day prior to non-farm payroll, I would like to see, and it will be very interesting or curious to look and to see what they will do with the um, non-farm payroll data. They meaning the market makers. This is a SEBI. A BISI then. A BISI is a buy side imbalance. gap is a fair value gap, but its specific technical name is buy side imbalance. Only on this side have they provide buy side and sell side inefficiency. I think we have analyzed that yesterday and see that they have passed through one time, two time. So based on that, we have done our prediction this for Wednesday. I was away from the charts since 8:50 this morning, so I have not taken any trade, and I actually have not even marked the day today. So with this review, I will have the chance to check and to see what the market have done. Already, we are happy to see this as we are happy. The reason why is because of what we covered in this video, where we said yes, he taught us to predict the future trading. It is in the name. This is how and why. So we did predict a run to the buy side. We have used and have did some annotations that I'm curious on lower time frame to see. We spoke about this tail above any candle. We have wick, and below a candle we have tail or tails. When we see long wick is, if we look at the body of the candle, comparing the body and the wick, the body is the wick is has more body than of less body than the tail. I call it long wick. This is a stubby wick, a short wick, because the body of this candle, if I remove this, the body of this candle, down close candle, is greater than this wick. I call this a short, small wick or stubby wick. You have also a long wick here. Look at the body of the candle, this up close candle. It opens here, open. It went way down and up and close right here. This body is have less space, have covered less space than the candle. This candle is for me long wick. And what I do normally, if it is going to matter in my analysis, is that I grade that tail, or if it is a wick on the upside of a candle, then I grade that also. It's a small one, long tail. We ask ourselves the questions that we normally ask ourselves whenever we sit before a chart. We normally ask ourselves, where were we when we were here? Where did we come from recently, and how strong, with how many conviction did we leave where we came from? And we saw that we came from this busy with we took some mohawks, small trading passing the normal level is busy, has been traded pass through it, and we use yes, we graded this long tail. We dropped, we predicted price to open, and we wanted to see price drop further at to this 25%, or this like the last cent for it on closing basis. We wanted to see price stay only trade only in this upper 50% upper quarter of this tail. The reason is that if it does that, we will consider this to be an indication and signature for strong bullish run. And we mentioned in the video this tail. We wanted to see what influence it will have on price delivery, and here we see that price respect this lower 25% or 75%, and then trade 2, I think it did not reach the upper 25%, but this one opened a very small accumulation phase, a small tail. Whenever we see this and as we trade, this is sign that we will have a large range day, and indeed we engage this buy side liquidity, these buy side liquidity, and even these buy side liquidity. We have engaged them, and now if the market close here, we have then create a higher high for the year, and we are. I think they will engineer price back down. This our prediction or anticipation. I'd like to see for after a long range day, expect a small range day to follow, and then this is Wednesday. Tomorrow, if we have a large day down or up, a small day down or up, then with non-farm payroll, we can see them either go strong up or strong down. Um, the, the market makers, given that we have U.S. election, are now in well, given that we are now in the election year, they are manipulating and influence price to the buy side. Yes, the geopolitical status of the world does have influence on price delivery, and the market maker does influence, does use that sentiment, that geopolitics situation in the world, situation in the Middle East and in mainland US to manipulate sentiment. And so we are looking at that those news event coupled with what is happening outside the chart, and we are predicting then our direction. I will drop to the 4-hour time frame. Bear with me. I'm growing day by day to give better presentation, the knowledge, the understanding, and how to apply this understanding. I think that is I'm safe to say that I have that, but now I am working on the presentation, and hopefully that I can serve with every record, with every live streaming, that I will become better and better to serve you. On the 4H, what we have seen, price have traded well, and since yesterday we have not opened the chart, not even today. I left about 15 minutes over 15 minutes past 8 this morning, and we see from the 4H perspective a nice run to take first this high, and this one have been engaged to. It's, yes, engaged to, which is great, which is nice. Now we see they have engaged the buy side liquidity. Algorithmically, I would like them to continue going further, but they are here left 1, 2, 3. This gap is what we call a busy. When there is a gap, whenever there is a gap between 1, 2, 3 candle and it is an up close candle, we mark it. I use the purple color to do annotation on the 4 hour. So if you see any purple color annotation, it is 4 hour annotation. So we are looking at this price based on what we have already done and what has happened today. We have seen actually a long range day today. It's from actually the opening, a small drop, and we have seen price have rally. Let me see how many handle. About 65 handle, 65, 66 handle. Price have rally toward the buy side and engage liquidity. Price tomorrow, in what we are predicting and thinking, is that price may have a small range day, but the small range day may be most likely be either a rally to engage more liquidity and then drop to the consequential encouragement of this 4 hour busy, and then close way down close, but not too and close, leaving us a tail. That is what we are predicting, what we will be expecting. There is also a scenario the price will drop and cover this space into this busy, maybe using institutional order flow entry there, and then continue to rally. That is actually another scenario for now, because we already have reached the monthly swing high, a monthly objective. What we have been taught is that it's best for us to sit still, backs in the projection, and see what they will do if they continue to go higher or reach for this 4 hour busy. If I look at the landscape with in mind that we are in non-farm payroll week, to be followed by CPI and FOMC week, I will be sitting still, wait for these news driver to engage and do their repricing, and then I will engage after those news driver have come and clear the table and left inefficiency. I don't mind sitting still. I don't mind sitting at the sideline. I don't mind just joining some live streamers, other traders, and see how they engage the market. What I do is that, based on my analysis, I think we already have reached a high time frame monthly, even a weekly, 2 weekly objective. So it is time to sit still and see what will happen. Go to the 60-minute and see some more detail. We were here yesterday when we were analyzing the chart. That's where we were here, and this is where we were, and we had predicted that price would drop to clear these swing highs. Price did drop, but it have left some swing high, some sell side liquidity below these swing high, and have not engaged them. We wanted to see price open, that is from this midnight open, drop, and we wanted to see price at least reach this 25% of the 60-minute tail. Back to the 60-minute, the 60-minute tail, 25% of this tail, to clear this sell side liquidity, and then do the rally up, the turtle soup up to first profit, second profit, and if it has enough strength toward this monthly high. Price did rally, but it has not taken the swing low, meaning there is still liquidity below this swing low, and now it has become relative equal low. There we have two forms of liquidity. First, those that have put long trades have trimmed their stop loss to just or at this swing low, or just below it, to protect their long position. Those that protect the stop loss, and those that trade breakout strategies, those that have their sell stop order, hoping that price will break through and take them into the trade, also have their order here. So we have two forms of liquidity below the swing low, and this one also have made this a relative equal low. Strong draw of price. Whenever we see price be somewhere here, we can expect that this will be a draw on liquidity, and we will engage them. We engage it. We are seeing beautiful these safe haven, relative safe haven for the retail. We spoke about that yesterday, and we talked about how price has leave smooth high on the buy side, and have practically worked out the sell side, and we have predicted and expected price to rally first to clear this one, engage this 60-minute, it did well. Take this one. This was one swing high that we expected, together with this relative equal high buy side. There is a weekly swing high right here. We look at this balanced price range, and actually we'll take it from off the chart, and our prediction was it could, and it did. It have rally toward this last month or 2 months ago swing high. We are content with what we are seeing. Our prediction skill, anticipatory skill, is growing. We are not, neither do we fear missing any move, any trade. We don't fear missing it out, because later, after I finish recording this daily review, I will go and do some back testing and journaling this whole scenario, so that I can have that in as a how you call it, as a experience that I with backtest and journal can record and annotate with positive uh, annotation. And yes, positive annotation. You can mark these. This is a, whenever you see the color orange, that is a 60-minute annotation. It's a busy buy side imbalance, sell side inefficiency. Whenever we see it, it is this candle high, this candle 1, candle 2, candle 3. Candle 1 high did not meet candle 3 low, and this gap, this fair value gap that is between candle 1 and 3 is in candle 2. This is what we call the busy, and with the up close candle we have busy, and if we see a gap like this on a down close candle, we call it SIBI. We see another. Here they have trade efficiently. Here they have left us a gap. Price the market, the algorithm is delivering, is repricing to this imbalance. It is actually the rule, the blood of the market. Price is either going to liquidity above the marketplace or below marketplace, or it is going or repricing to imbalance to make them efficient, or use them as inversion variable to drop lower, make some imbalance here efficient, and then go trade further. But inefficiency and gaps and liquidity, that is what algorithmic price delivery is all about. If you can keep that in mind, then you actually have mastered this. The market is going only up to go to a SIBI. It is repricing to a sell side imbalance and buy side inefficiency to drop, or go to a SIBI, or go to a to buy side liquidity, and the market is going down either to a busy to make this imbalance to balance it, or drop to go to this relative equal lows or the swing low, where under which we have liquidity in this sell side liquidity. Here we have something we can mark. This is what we call an order block, and ICT have explained thoroughly what order block is. I'm continuing saying this. Nobody can explain his language, the language he have developed to understand the market better than he is. I recommend, I actually send people to go to take first a course and do some study and pick. It is the first you do a course by him, a course that will allow you to understand the language of the market. Then you pick one model. He have, I think, about 81 model. You just pick one, backtest that one model, journal it, look back to old data, and try to find how often you try to see how often you can see it in old data. And if you can do that for a couple of months, actually daily, and then before demo trade, or even try to trade any trade, real life trade, then you do tape reading. And I think that is where my channel can help and give the support. It is the contribution I want to give, and actually I'm doing this to be able to trade like this. Let me to trade like this. I want to be able in time to trade naked and have these level in mind. The SEBI be able to see that and see these relative equal highs and really trade on a empty or a naked chart. But for now, I am not on a naked chart. I am trading with still my annotations on, so that I can train my mind to see with tape reading the levels that price is engaging. This is also a significant understanding. If you see so much annotation on a chart, somebody who claimed to be a teacher, I don't hope you want to buy the material that is free, available for everyone. You can go to ICT library and find any concept, any topic relating to smart money trading, algorithmic price delivery. And so we don't have to be the teacher, but we have we can just help our community grow and thereby also grow for ourselves. If you see a lot of annotation on the chart of a trader, either he is trading with one monitor, and for now that is what I'm doing, or he is also in the phase that he is learning how to see these gaps in his mind eye. So after maybe a year or two, depend on how well that person is, how fast that person will get it, you won't be able to see these lines and this level anymore. For then they will be trading naked chart. For now, bear with us. I will be explaining all these lines. I'm using the red color for my monthly annotation, red color. This red. I want to have some lighter red color for monthly annotation. The weekly annotation, I am using the green color, this green. For 4 hour, I am using the purple color, the purple. For daily, I am using blue. So these lines, these annotation, blue are all coming from the daily chart. So whenever I look at the chart, I see these daily chart levels. I see these purple, meaning they are from the 4H, and orange I use the 60 60-minute hourly and annotation, and yellow orange. Let me see, the 50-minute I use this color, rose in Engels. Anyhow, I use this color for is it pink? Yes, I use pink for 50-minute. For 5-minute annotation, I use yellow, and then for what we are look for 5-minute, and then for 5-minute, 1 minute and less, I use the lighter green, and it is this green, 1 minute and less is 5-minute, and 5-minute chart, 15-minute chart, 1 month, monthly, daily. And I use most of the time this for gaps like opening range gap, and on this I can put the daily or currently a new week opening gap, I use it. Sometimes I use the color black to do some annotation on the chart. So we're at the 60-minute. Price has traded on this side. Whenever I see these kinds of rally, my mind directly go to what we call the market maker model. Whenever I see an expansion toward targets, and I will be going to the 15-minute as we have just seen, and I think we have here a market maker sell model in development. Either we might get another spike to create a reversal pattern, and then we will see very quick repricing to the base of the market maker model. Where have we seen it? I think it started from here. This is the base of it. The base of it. It expands, return to base, and expand again. Have actual multiple. This is really the return to base. This is the first return to base. So I will be having this as my first. We're having this as my original consolidation, which I normally highlight with black, and then the expansion, that is, this is the first return to base, another expansion. This is where we normal buy. This order block will become a reclaim block on the other side of the curve. Now riding, this is the 15-minute, then we have to annotate it with this one. I can use also this color to distinguish. The base is for me not clear in this one. I will be looking further for a somewhat clearer consolidation, drop, expansion is a drop to base. I will be defining that as we go. We see this, we drop to this order block and expand higher. This is just another expansion higher. Here we see another reclaim block, and I am expecting, so I'm here expecting to clearly see first a smart money reversal. We can either have this type of reversal is high that has been created, a higher high, and then a drop. It is the breaker reversal. We can have a high that is formed, a low, and a failed breaker reversal. In either one, I'll be looking for this breaker reversal. For if price trade below this swing low, this breaker swing low, I'll be expecting the low risk buy and then the first and the second stage accumulation. If it was a normal trading week, and the way they are setting it up, it gives room for you to speculate that they might use an algorithm to do the repricing down. Either we are looking now in our analysis, and this is now our prediction time. We are looking now to, because we already have reached a high time frame objective, we have already passed through these also high time frame weekly, monthly. This is the order flow. The model that has been deployed, we are thinking it is a market maker sell model. So this is return, first one, and this second one, entry. And if we see that we find a a rally to create a smart money reversal, a low risk sell. This the first stage of accumulation, and then aggressive drop to this reclaim block. With a second retracement, I will engage and run to below these market this base of liquidity, taking maybe my profit at this um, daily consequential encouragement of a tail, exiting actually earlier before they reach the base. But on knowing and understanding that this model is allowing price to trade to the base, and this is where we will see the second stage. First stage low risk buy, second stage, and then first stage, second stage of redistribution till the base. It is something that we will be watching tomorrow. And where do I watch that? I will be hunting on the this chart, that is the 5-minute chart. With all that in mind, all we just set in mind, I will be hunting. I'll be looking for the aggressive drop below, like this: high, low, higher high, drop below it. If you can see, high, high, low, higher high, drop below it. And then now we go to the this how you call it, this smart money reversal have occurred. We are rally to this this SEBI about actually here, model 2 and 22, and then we can drop aggressively to see the accumulations and the delivery on the sell side. So I'm trusting that this being a market maker model that we have been looking at, seeing today trading, where the base is quite difficult for me to define now, but the expansion, the formation of it is clear that it is a market maker sell model. The only thing that we have is that we don't trade tomorrow and Friday. So I'll be looking for price to maybe consolidate and stay within a certain range, and then deliver with non-farm payroll to certain liquidity, and then leave a beautiful run for Friday to close this model. The last one is that we always check the other sister, how they are trading. 15 minutes is the best to watch it, how they are doing. Price have trade just as we want them to, wanted it to trade. Maybe the base of this one is better to define. That is what I will be doing tomorrow if it was for me a trading day. This is a normal thing. When you see 1, 2, 3 a higher high, you expect distribution, and I think this distribution will be in accordance to the sell side delivery of the market maker sell model, aiming first as this, and then look to how far it want to go below this swing low. It's a Nasdaq, and the barometer, that is the Dow Jones. We don't trade it, we're just using it to check smart money, SMT smart money tool, smart money technique. The Dow Jones is way out of step. However, we saw this draw, I think it is Wednesday today, a very strong draw, drop to the sell side at 950, the news embargo, the news release, a strong drop, and now we saw him returning to take this and close. A very nice run, running with the other sister. So I expect price to first rally, maybe to engage his buy side and then drop, focusing on this and this busy. Focusing on this. This is how I would like my chart to be in the future, at just 1, 2, 3 lines. This has been engaged already, so they engage buy side liquidity that left for them to drop and clear this. But before they do that, they have engineered liquidity right above these swing high, relative equal high. I expect them to rally to engage them. This is also a relative equal high, maybe a spike up again to engage this high and then drop to cover the sell side. I just also, let me see what dollar index is doing. We are seeing a drop in the dollar, or we have seen a drop to the downside, which is risk off, situation, mark to market. You have the forex exchange market, and you see this drop in the dollar index. You will see inversely a rally in the forex exchange market, for foreign exchange market. What we can see and know, I think it is still too shallow run on the dollar index, and we can actually expect price to keep on run. This is too clean, and smooth edges like to be made jagged. I don't see any inefficiency here that I can say we can go for that run. And if we see this, continue to see this drop, the other market, in our case future index market, are allowed to trade higher. So we don't know what they will do, how they will use the data for the non-farm payroll data. All we are expecting to go down, but then I can trade better, or they can leave the high just like it is now, 20, and start engineering buy side liquidity again together with this swing high, this one. So that's what is now with this about relative equal high, and start engineering buy side liquidity again by dropping to the sell side and giving trader the feeling that we are now going lower. In the meantime, they are engineering buy side liquidity to be taken out later. This is the daily review. We have not missed nothing with our backtest and journaling. We can go to the chart and then make annotations, give yourself positive encouragement, see the movement in old data, make annotations, and do some logging in your do some logging in your journal. I am this it is really the analyst in me that is being built or groomed for consistent trading the market. This is logbook 7. I have a lot of them. I have gained and acquired a lot of experience, and that is why I say I am trading the market, approaching the market with this man, his concept in mind. Tape reading first and foremost. This is where I focus. Tape read first and foremost the market, and then in time I know that I will be better trading algorithmically. Thank you. You have bear with me. I'm working on some better presentation skill. I will be good at it. I don't give up easily, and it is not my native language, but I'm focusing to reach a greater audience, and that's why I'm trying to do a presentation in English for now. Goodbye. Algon and I greet you.